Hello everyone. The first question is, what's the Japanese bubble? Mainly refers to the period from 1986 to 1991. Japan's real estate bubble and the stock market bubble mutually promoted the bubble economy of the 1980s. So how does this happen? In 1970, the Japanese economy was in a rapid growth. This is because the expansion of investment in emerging industries and the development of the steel machinery industry, which have strengthened Japan's export competitiveness and promoted economic development. This period is called the economic miracle. In 1973, the outbreak of the Middle East War caused inflation, which led to soaring prices in Japan. Therefore, the Bank of Japan's implementation of a tight financial policy led to the first negative growth of the Japanese economy. In 1975, Japan completed the transition from an oil-dependent industry to an energy-saving industry. To a large extent, Japan's international competitiveness has been enhanced. After 1980, the Japanese economy was supported because their products were cheap and exported to Europe and the United States. At that time, country's economic growth rate was 2%, while Japan's economic growth rate was 2.9%, of which 0.9% was the output industry. Of course, it has also intensified trade friction between Japan and the other countries.
Let's talk about the Plaza Accords. Since 1980, a large amount of foreign capital has flowed into the United States as the U.S. government raised interest rates. So the U.S. dollar continued to appreciate, and the U.S. export competitiveness has declined. Under this economic pressure, the United States hoped to devalue the dollar to strengthen U.S. export competitiveness and reduce the trade deficit. On September 22, 1985, the United States, Japan, Germany, France, and the United Kingdom signed an agreement to jointly intervene in the foreign exchange market, including a depreciation of the US dollar to solve the economic problems. Plaza Accords, the above 5 countries began to sold a large amount of dollars in the international foreign exchange markets. This made a lot of investors mindlessly sell the US dollar in the markets, which results in a significant depreciation of the US dollar, a drop of 25%.
And now let's take a look at the financial liberalization, another critical trigger of the Japanese bubble. To save the downward economic in 1973, Japanese government implemented a series of actions to boom the market. That is called financial liberalization. However, it finally generated a huge bubbles. Losing in industrial. Before 1973, banks are the only participant in Japanese currency circulation. They transfer the wealth from households to corporates. Well, with the economy war coming into a sharpened slowdown, the government welcomed more foreign financial institutions and other non-bank companies into the financial market and hope that they can supply more capital. In 1973, Japanese also sold the interest rate cap. The high return on investment exactly attracted a lot of foreign capitals invested into the Japanese economy. But they didn't go into the manufacturing industry as the government hoped. Conversely, they were coming into mortgage and stock market. And at that time, many real economic companies encountered the loan difficulty in such a high-rate environment. In the 1980s, Japanese banks lent a lot of money to debtors who need the money in the real estate loan. With the continuous inflow of funds, the whole Japanese economy was gradually dominated by real estate. More and more firms have to invest in real estate to keep their living space. Japanese stock market also has a similar situation. Financial liberalization allowed foreigners to enter the Nikkei market with a relatively lower cost, and they helped the Japanese to create a tool named ZTAG to easily lending money in stock market with a low interest. Under the huge inflation, lots of Japanese firms has overvalued profit in their financial statement.
The deregulation of the Japanese government in the 1970s and early 1980s allowed large companies to enter the capital market without relying on banking financing. The mine bank's business became a loan to real estate developers and families seeking mortgages. The Japanese government signed the Plaza Accord and allowed the yuan to strengthen against the dollar, but it has greatly weakened the Japanese export competitiveness. In response to the economic recession caused by the soaring yuan, the Japanese government decided to reduce the discount rate from 5% in January 1986 to 2.5% in February 1987. Then, the flood of cheap credit in the Japanese market triggered an investment frenzy. The Japanese government also used low interest rates to encourage corporate lending expansion, and used the escort system to protect the financial industry. But the strong economy, low borrowing costs, and loose financial regulation have fueled the bubble in real estate and stock markets. Then the Japanese economic bubble was discovered. In 1989, the Bank of Japan finally began to raise interest rates sharply to puncture the bubble. But the authorities believe that the economic recession is an inevitable short-term business cycle, and the economic recovery and growth will appear soon. As a result, there was little change in monetary and fiscal policy from 1992 to the first half of 1994. When real estate and stock prices plummeted, the banking system was severely damaged. Also, Japan has implemented large-scale fiscal stimulus plans many times since then. The government did not take serious policy measures to let banks dispose of their non-performing loans, which further inflated the non-performing loans and becomes the direct cause of the banking industry's paralysis. In addition, the Japanese government overestimated the economic situation in 1997 and beyond, and then shifted its highest policy focus from supporting the economic recovery 108 degrees to solving the long-term structural problems of budget deficit reduction. In fact, instead of recovering, Japanese economy stagnated in 1997 and then went into recession.
Finally, I will talk about the impact of the bursting of this economic bubble on Japan. After the bubble burst, Japan's economy stagnated for more than a decade. Because asset prices, households, and financial industries have been severely affected. Firstly, share prices and land prices plummeted, bringing unprecedented shocks to the Japanese economy. The Nikkei index decreased by about 24,000 from 1989 to 1992, and average land prices in 6 major cities dropped by about 15% from peak period, far exceeding government expectations. Secondly, Japanese become pessimistic about consumption and investment due to huge debts and reduced household income, resulting from long-term declines in asset prices. They are more inclined to hold cash because they believe that the value of cash in the future will be higher than that of today, which cause deflation. Finally, the easily obtainable credits caused the banking industry to suffer a heavy blow after the bubble burst. Many companies failed to repay these loans and went bankrupt, so that banks have to bear high debts, and their mortgage assets become uncollectible as land and stock prices continue to fall, which led to huge losses to banks.